AMC rally continues, ladies and gentlemen, up about 5% on the day at about $40.66 per share. So I will take this any day of the week. We are over $40. We are heading into earnings coming on Monday, but there is a major catalyst happening in about 2 hours from the time you guys see this video at 2 p.m. where Fed Jerome Powell is going to be giving a speech about basically where he sees the economy, if he is going to be tapering, and that could cause a taper tantrum. That's what it's called in the investment world. This could mean interest rates going up a little bit, but we don't know if this will actually happen. It's widely expected he will begin to taper, but if he does or he doesn't, there's some implications on both sides that could affect the overall market as well as AMC. So overall, the situation very, very bullish. We're going to go over the short interest data, the 13F filings, the Stocko tracker data as well. Give you guys an intraday update. So if you get value out of this video, hit that like button for me, consider subscribing to the channel, and also check out the sponsor of this video, that is Moomoo. Get access to after-hours trading and full pre-market trading, 24/7 financial news, as well as chat with like-minded investors over there. Sign up with the link in the description. Get up to $350 in free stock when you deposit $100, as well as a free share of GM when you deposit $2,000 onto the platform. That's about a 2.5% return just with a free share of GM itself. So that's all. Let's get into this video. So like I said, AMC up about 5% as we currently speak. Something to pay attention to. We are on the daily candlestick chart. We are in between the 50-day moving average and the 100-day moving average. Now, we did get rejected at pretty much the same level we did last time at about $44 per share. That's where we top ticked earlier in the day, and then came right back down. Now, watch to see if we stay above the 50-day moving average. I think we will close above the 50-day moving average. If we close above the 100-day moving average, that's where the situation gets incredibly bullish. And the 100-day moving average is at $41.82. The 50-day moving average is at $40. What is that? $40.50 per share. So as long as we stay above these two numbers, that's going to be a great sign heading into the rest of this week. And obviously earnings coming on Monday. Something that I do want to point out though, we are only seeing 51 million for volume at the current moment. So you're not seeing these crazy high volume days. We've seen higher volume in the past over the last, this last rally when we went to $44. The last time around, we've seen higher volume than what we are seeing right now. So we don't have that big catalyst to drive the volume home. That's probably why we're starting to slip a little bit right now. But coming on earnings on Monday, that's where you're going to see that volume kick in. And the higher we are until earnings, I think it goes without saying, that's obviously better AMC should perform after earnings. Just because we're at a higher level, when you do get that good news and that volume, we should continue to go higher after earnings, and that is what I am betting on, and it's a pretty safe bet in my opinion. That's why I've been buying so much AMC recently, because all throughout 2021 you would have made a ton of money if you just bought AMC the day of earnings and held it 2 to 4 weeks. You'd return 60%, 1,000%, and then a 100% gain throughout all of 2021. So I do think we'll be in the neighborhood of 60 to 100% at least after earnings. That's what kind of return that would put us at all-time highs if we did go up 100% after earnings. And when you change the fundamental valuation of a company, like announcing brand new entirely different business line, you could see huge enthusiasm and just higher multiples of potential future growth. That could be a bomb for the shorts to cover, but don't get too hung up on that. Anything can happen. Now, let's talk about the Ortex data. We're looking at 16.86% short interest, so still really, really high. Take these numbers with a grain of salt. We were just at 18% short interest October 26th. So this 16.86% number is only Ortex's estimates, and they are not too accurate all of the time. So that still bullish right there at about almost 17%. 86.24 million shares that are sold short, a very high amount relative to the volume that we have seen over the past couple of weeks. Share utilization is at 87.63%, and the free flow on loan is at 20.84%. And what I want you guys to know is yesterday during the after hours when we did see that rally, we only seen about 2 million in total volume, and a lot of that was FOMO buying as well. So when you factor all of that in, I think the amount of shorts that actually did cover, maybe 200,000 shares, maybe less than that, because I think, like I said, just a lot of it was FOMO buying that was going on. So not a lot of shorts actually covered that did make this move higher to the upside, and that was obviously due to Bed Bath & Beyond having great announcements after hours. The stock went up about 80% to close after hours trading yesterday. So I do think this, meme stock rally is here to stay. AMC could give all meme stocks a boost to the upside coming on earnings, and that's exactly what I'm watching for. As far as the Stonko Tracker data, we are seeing this monthly options expiration date for the month of November, that's obviously November 19th, is starting to populate very nicely. We're seeing about 30,000 calls that are currently in the money, 160,000 calls that are out of the money. By the time this comes around, by the time we get earnings and we see a lot of people pile into, obviously, calls, we could see a pretty substantial gamma squeeze. Now, I would obviously take this with a grain of salt as well. We've seen higher weeks of open interest on the option chain, and we have seen the price go down. But considering earnings, considering the amount of activity still relevant on the option chain, I think we're setting up for a big move. Like I said, other than that, you're not looking at anything too crazy. If for some reason we do, rally throughout the rest of this week, you're looking at 64,000 calls that are in the money, 125,000 calls that are out of the money expiring on Friday. So you can see a decent gamma squeeze just because we do have, like I said, about 64,000 calls that are currently in the money. That's a pretty decent amount of shares that will have to be hedged for, but who does know? We might see an earnings run up into Friday because earnings is on Monday, or we could see the opposite. We could see AMC sell off into the end of this week. It's really going to revolve around this catalyst at the, about 2 hours from now, almost exactly. By the time you guys see this video, it might be about an hour and a half until this catalyst. So definitely keep that on your radar. Like I said, other than that, you're looking at the monthly options expiration dates are the only ones that do have a lot of activity. The next one, December 17th, looking at a substantial gamma squeeze right there. And then the big gamma squeeze potential is January 21st, 2022. That's not to say the MOASK won't happen before then. I think we'll see a big increase in price before then, but if nothing crazy does happen, or even if we do go crazy, doesn't matter. You're gonna see a lot of hedging happening by January 21st, 2022, and this is probably the expiration date where a lot of hedge funds have been using, buying these calls, selling these calls to essentially hide their short interest. So there's going to be a lot of volatility for the next couple of months. I hope you guys are ready and you have your emotions in check. Now, the 13F filings, this is very interesting. We're seeing a lot of firms continuously buying brand new positions. Take a look at these two. Asset Management One Co., 217,000, almost 218,000 shares, a brand new position, as well as Royal London Asset Management, 178,000 brand new shares that they did purchase. Another 35,000 brand new shares purchased by ELO Mutual Pension Insurance Co. Right here, Clean Harbor Asset Management, you're seeing them liquidate their call position as well as their share position. And then Princeton Global Asset Management, they did sell out 100%, but not very large positions in the grand scope of things. Only, a couple thousand shares here and there. But a majority of firms continue to hold on to their positions. Raymond James and Associates, Benjamin Edwards, New York State Common Retirement Fund, a bunch of, higher valued names that are holding on to their positions. And this right there is a great sign to see the overall sentiment of the hedge funds and institutions. Now, finally, what you guys probably are waiting for is this catalyst. The Fed is about to set its post-crisis policy course with a high level of uncertainty ahead. And like this expert of the Federal Reserve does say, that essentially there's right here, there's just a very wide range of possible outcomes. They need to be nimble and responsive, said Bill English, a former senior Fed advisor and now a professor at the Yale School of Management. I worry that the markets will think that they're on a steady track to run purchases down and then begin raising rates when they may just not be. they may have to act more quickly, they may have to raise them more slowly. As things stand, the market is betting the first rate increase will come in June 2022, followed by at least one and perhaps two more before the year is out. In their most recent projections, FOMC members indicated a small likelihood of pulling the first rate hike into next year. So not very likely chance that we do see a rate hike, but that could happen. So he says he needs to note that there are risks on both sides. Of course, there are risks that the inflation we've seen proves more persistent than they hoped. English said, I'd like to hear him say that there are downside risks. Fiscal policy is tightening a lot. So Jerome Powell basically is under a lot of pressure to walk this fine line between not ignoring that inflation is here longer than they had expected and not to say that they are tightening down all the money that they have been printing and propping up the economy. If Jerome Powell can walk that straight line, begin to taper just a little bit, I think the markets will love that. If he does go too hard with tapering and possible rate hike increases or being too hawkish, market's not going to like it. If he just flat out plays a blind eye to what is going on in the economy as far as inflation is concerned, obviously markets will not like that as well. So we're just going to have to wait and see what does happen. This could impact AMC. We're seeing the markets actually slipping down right now. So pay attention to this situation with AMC and meme stocks in general. Looks incredibly bullish still. We've seen a nice rally over the past, 36 hours or so. So that's going to be all for this video. Check out the links in the description for free stock. The link for Moomoo. You guys cannot go wrong with that app. I'm looking to invest in the company as well. That is ticker symbol FUTU, Futu Holdings over on the NASDAQ. Looks to be undervalued. Might make a video on that sometime here in the near term future. As well as that, if you guys want access to all of my buys and sells in real time, check out the link for the buy and sell alerts in the description of this video as well. It literally pays for itself and it is very inexpensive. So that's going to be all for this video. You guys enjoy the rest of your day and I will see you in the next video.